And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and some other things, as well as prop firm trading. So we're going to get into this in just a second. But since we're talking about trading and putting real money at risk, we need to talk about the risks of trading and stuff like that. I also live in the United States, so I'm pretty sure this is required by law. It goes something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Excuse me. Let's see. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. The CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage may work against you as well as for you. Before trading Forex, consider your investment experience, risk appetite, and objectives, and your investment objectives too. Those are highly important, and you could sustain a loss of some or all of your investment capital. So, contrary to what they want you to think, if this were just like walking into a casino and hitting slots, that would not be. That's not what this is. This is a lot more sophisticated than that. There's a lot more things at play, a lot more things to consider than just going in there and hitting buy sell trade button all the time. That is not. That's called what I call casino finger, and I've gotten it before. And it's no good. But it requires a lot of patience. I do recommend reading a book called The Disciplined Trader by Mark Douglas, as well as on the Trading in the Zone. Trading in the Zone is this book that came after. About 10 years after the Disciplined Trader, but the Disciplined Trader is the one that went off first. I think more the the Disciplined Trader is not available in a lot of podcasts, a lot of the current entertainment objectives. You actually have to buy a book and turn the pages and stuff. But I highly recommend it. It's better than Trading in the Zone, in my opinion. But anyway, let's go ahead and get into it. Excuse me. A little bit of coffee. So here's what we've got so far the DXY today. If you're trading dollar-based currencies, it's kind of inching up a little bit, but not really going off in any great torrential places. Let's go ahead and get the daily chart since we choose our trading. Choose what we're going to trade by the daily charts, the weekly and dailies, and then refine our in and out strategy by entry and exit strategies by the 4 hour and 1 hour. So let's see. Right in the middle of a great big selling block and getting into a bigger selling block. So it looks like we're going to have more downward pressure or more not going anywhere pressure on the DXY. So don't expect a whole lot of change in that as far as that goes. We did as far as currencies. Look at that. British pound's on top today, followed by the US dollar, and the Japanese yen is way down here along with the Kiwi. Let's see. Event risk. We have that around here somewhere. What did I do with it? There it is. Get a refresh on this. First, let's see what the Aussies did yesterday. They may have held. They may have freaked out and nope, they held. Okay. I mean the Kiwis, the New Zealanders. Let's see. The Royal New Zealand Bank held. And a bunch of okay news out of Europe. Looks like nothing really gangbusters. Looks like inflation's about the same as it was in Britain. Great Britain. So that's interesting. Today we have Beige Book. No, we don't. We have obviously minute meetings. I think it's the same thing as Beige Book. I don't know. I'd have to look it up again. I haven't really paid attention to Beige Book. And then we have core durable goods coming out at 8:30. So that's another more event risk on the U.S. dollar side. Euro versus the pound. Pound is leading by a little bit today. Again, not something I really trade. Here we go. Euro versus the dollar. Not a whole lot going on there either. Just kind of in a great big area of buying strength, but it's going down. Might be something else going on. Let's look at bond yields real quick. So just do a quick scan. They're mixed today. They're not quite as as all one-sided as they were yesterday. So we're getting a little bit more of a mix of what's going on with the bond yields. Of course, bond yields reflect interest rate intentions, and that also can help us figure out some profitable trades on as far as that goes. Now, getting back to the technical side of it, dollar versus the or euro versus the dollar. It looks like it's heading down today. Got a great big doji right there, but it's not the kind of doji, it's not a turnaround doji I like to see. So it's actually a price rejection and then a follow through for lower pricing. So sometimes the candlesticks, that's not a turnaround candlestick though, clearly. You've dollar versus the yen starting to perk up a little bit, coming off the 152, this area where we were talking about the carry trade unwinding. Looks like that is definitely not happening again. So we've got a lot of upside potential for the U.S. dollar. Not going to say it's going to happen, but it's a lot of upside potential. Pound versus the dollar, again, looks like that is a turnaround doji right there. Let's see if it continues. It's got 11 hours to work with, though. So that may not be going anywhere. That looks like it might be headed up, though. So we'll see about that. The thorn on my side, pound versus the yen. Got to do a sell trade right here. Looking for it to break out further. It did not. It reversed. So I lost about 3% in 2 accounts yesterday. So just want to mention that losses do happen. And I was not paying attention to the trade too. I was out of the office most of the day yesterday. I came back to the office. I was in a losing position and decided to let it go overnight, which if you're selling the pound versus the yen, if you're selling that and you go overnight, you're going to get hit with a charge. It's called the reverse carry trade. That's where you pay money for the difference in interest rates between the British government and the Japanese government. So let's see. Here we have it kind of inching back up again, but it's not really going gangbusters yet. We've got a very strong mean reversion signal right here that I should have picked up on this a couple of days earlier. Now, mean reversion does not work all the time, but it is a pretty good turnaround indication when you've got a candle way down here and then a candle right here that closes inside this Bollinger Band, the two deviation Bollinger Band. That is a reversal signal. It reversed and it came back down, thought it was going to break through lower, and did not. In fact, it didn't even close below the Bollinger Band then. So that's how that worked. And I also just ran my, not that one, this one. Ran my Bollinger Band and RSI mean reversion EA for MetaTrader 4. And it turned up profitably for the pound versus the euro. The pound versus the yen, which is very interesting. And it might work better than the pound versus the euro, too. I'll have to try that. Let's do that right now. Pound versus the euro. Euro versus the pound, I think is what this symbol is. I can't find it, though. I'll do that in a minute. Let's see, I did right. Onward. Euro versus the pound, the yen. Expect the same thing, except not as wild as the pound versus the yen. Pound versus the yen is known as the dragon. The euro versus the yen, a lot tamer. You also almost had a reversal signal right there. It almost closed inside of it, but did not. So that's again an indication that it could be turning around. Clear price rejection right there at 181.19. So that's that. Dollar versus the Canadian, perking up a little bit after yesterday's jawing back and forth yesterday. Canadian versus the yen, going up, but not going up as quickly as anybody wants it to. Again, not a gangbuster type scenario, but it is it's starting to slip into a consolidation period, a small, lighter consolidation period, which could go either way as far as that goes. I don't see any major triangles forming, so oil just kind of hanging out again, consolidating again between looks like 62 and 65. Again, not really going anywhere. Dollar versus the yen. Pardon me, dollar, Canadian versus, Aussie versus the dollar. Here we go. Nice consolidation pattern right here at 71.70 or 70.70. So could see that moving upward as time goes on, but a lot of buying potential right down here. Gold. Ooh, perking back up again. Got up above 49. So 49.13. Big beat down on gold when the Fed decided to stick more money into the treasuries, or started to buy, inject $16 trillion, billion dollars, $1 trillion. I didn't see the whole thing. Fed's intervening with the markets again. Should not, but they do. Platinum. Nothing exciting there. Palladium. Nothing exciting there. Silver. Perking up a little bit, but still looking on the sellish side. Cannot get over that yesterday's close. We'll see if it gets above yesterday's close. If it doesn't, then it's probably going to be consolidating right here around 75, which is a good consolidation pattern for it. We'll see if that continues. Look at the software stocks get beat up on yesterday. Intuit down 5%. Upwork which is not part of the IGV, but it is one that I'm very angry with and have been angry for a long time. Down 3.5% because of the way that they treated their customers. But all the software sector has completely forgotten who their customer is, and I want to hammer that never forget who your customer is. And the entire software industry did that, and turning their back on small business. Instead, they're betting hard on AI and losing because they're losing because AI is not going to pay their bills. Their customers are going to pay their bills, and they forgot that. So they get what they deserve. I'm enjoying watching this go down. The entire software sector was down about 2.2% yesterday. So that's that. With that, that's about all I've got today. Things to watch for today. Golly gee, I don't know. I guess probably going to wait for the wait and see what happens with durable goods, and then again with the FOMC news minutes. And then, the rollback of New Zealand governors can speak around 2:10. I'm not sure what that's all about. And then Aussie unemployment later on. So with that, that's all we've got today. If you like this video, then hit the like button. If you want to see more of these videos, then subscribe to the channel. And if you want to talk to me, then comment on the comments below, and I'll get back to you as soon as I can. But in the meantime, you guys have a great one. Talk to you later. Happy trading.